Thank you, ladies and gentlemen. Great to have you here. I know it's been a long and very interesting day, and we've just got this panel and one more after this left. So thank you for staying, and I'm sure it'll be very interesting, and your attention will be well rewarded. So we're going to be discussing decentralized finance and navigating the new ecosystem there. I'm delighted to be joined in the room. We've got Charles Kerrigan, a partner at CMS, Timothy Masad as a director of the Digital Assets Policy Project at Harvard Kennedy School and former chair of the Commodity and Futures Trading Commission. And virtually, you'll see on the screens there, we have we have Laura Lowe, Director of Blockchain at Temasek, and Martin Deal from the Bundesbank as well, who is Head of Section Payment Systems Analysis at Deutsche Bundesbank. Thank you. So thank you all for joining me. And have we got a background echo there? No, I think we're okay. So before I get started, I'd just like to bring up a poll, which I think will appear on the screen. We thought it would be interesting just to gauge the levels of participation in decentralized finance. So there's a range of options if you've participated in a DeFi transaction yourself, if you expect to in a given timeline, and be interested to see. I imagine this group is not exactly representative of the general population, but I think nevertheless it'd be interesting to see exactly the degree to which people are already involved and whether they're just watching the space. And you'll see that on the app, and we'll bring the results up a little later. So to start off with, DeFi, I think it's probably a term everyone in the room has heard plenty of times over the past couple of years. But I think despite the fact it's become a fairly well-known term, there is still some work to be done in establishing the boundaries of what actually constitutes DeFi and what is and isn't included in that space. So I thought that would be a good starting point for the panel, just to work out what exactly we are talking about. Charles, would you like to kick us off on that? I think I'll bring it to everyone, but yeah.
Hard going first, so I'll be quick. So DeFi simply means no intermediaries, by which we mean fewer or different intermediaries, because there are always intermediaries.
I sort of think of it. Is this on? Can you hear me? There we go. At least in the U.S., you walk into the grocery store and it says organic. It's like, well, what does that really mean? It's kind of like that. It's such a vague term. We don't know exactly what it means. It clearly is. Charles is right. It means the absence of centralized intermediaries, but to what degree, or it's kind of like calling something green. And it's like, well, just how green is it? So that's the problem.
Yeah, absolutely. Martin, have you got any thoughts on how you guys think about DeFi? What is inside and outside that tent?
I must say first, I like the answer by Charles as well as Timothy. There are 50 shades of decentralized in the world. I think decentralized doesn't bear a meaningful and decisive content, really. We can talk about intermediaries, but it is only one aspect of decentralized. There are others, and I think no one less than Vitalik Buterin has already told that it doesn't make really sense, and you don't find those words decentralized or decentralized in the Satoshi Nakamoto's paper. You find intermediaries, you find a centralized authority, but I believe what the essence is this not what many people mean when they talk about decentralized finance is automation of processes. So it could be a huge innovation driver, but it is not an industry in itself.
Yeah, I think the automation is certainly a key point there. And Laura, anything to add to the already thorough and comprehensive definition we've had already?
Yeah, definitely. I think everyone has kind of like espoused the key points for DeFi. Nothing really further to add except that I totally agree with Martin as well that that's the point of digitization, right? How do you actually bridge the old world, Web 2.0 with potentially a new world through digitization? And You got 50 shades of gray or on the decentralization. So
just the absence of a lexicon that we all agree with, right? Take Bitcoin, right? I mean, in theory, Bitcoin is highly decentralized. Anyone can have a node, anyone can participate in validation. In fact, there have been studies that show that 51% of the mining capacity is controlled by just a very few miners. So how decentralized is it? And, with other blockchains, you've got foundations kind of lurking in the background. It's like, well, what exactly do they do? So that's part of the problem.
Yeah, absolutely. So I think, we have decentralized settlement with Bitcoin, but then the other side of this is not just the settlement, but governance and actual decision-making as part of it. And obviously, I think that's some version of that, I think, has probably got to be a key feature of anything that we're really calling DeFi. But can you talk a little bit about, I'll come to you first, Charles, if you don't mind. Can you talk a little bit about what the benefits, like why is decentralization, I think on various panels we've talked about when decentralized settlement is appropriate, but can you talk a little bit about why decentralized governance might be a desirable thing?
Yeah, sure. So I think I maybe start by going back over some of the old ground. I think that the real argument for decentralization is, for me, connected to resilience. We're seeing the logic of the single point of failure becoming more and more apparent as state supported hackers are in our system. So I can see that there's a logic to it for sure. I think in thinking about DeFi, so I don't represent the industry, but a lot of clients have got DeFi projects, and I'd ask us for this next short while to do a thought experiment where we assume two things are true that we normally assume aren't true. So one is that the people who are doing this are sincere, and that they are genuinely trying to run socially valuable and innovative projects. And the second is that they may be able to decentralize. So we can kind of overcome this point of, as Tim says, in practice, most projects aren't decentralized, but I think some of the technical developments that are operating now relate to gating around token issuance that would develop decentralization. And the reason I start with that is because the lack of entity, the entity would be substituted for voting. And so this difficulty around how is this regulated will come back to there isn't an entity, but there are people who voted to establish a DAO, and the DAO is only smart contracts and software. So there is some possibility that we're not far away from the ability of projects to truly decentralize. So that brings us to the point that this is most interesting from a social perspective because it is around governance and voting and how sociologists would consider that. The difficulty is, I think, a version of Tim's original point, though, that one of the ironies of anything to do with crypto is that whilst it is, in theory, democratic, in fact, it's a highly elitist project from the requirement to be literate in computer science and cryptography to really operate the projects well through to if you want to make money in crypto, then you need $1 billion, and you can put $1 million into every project, and a handful of them will pay out handsomely. So all of the practical effects of it are relatively elitist. So it brings me to the short answer to your question is I do fear that whilst we're setting up the theory around some interesting and novel governance models, the fact of it will still be the most able and engaged participants will be the ones that are taking decisions.
Yeah, it's going to be very difficult to come up with a fair governance model that doesn't reward the people that have already built up a great deal of capital, whether that's technical or literal in this space.
Yeah, I agree with all that. I think there is, at least in theory, these benefits of resilience, no single point of failure, more democratic governance, maybe more inclusion, more accessibility. You know, all of those are very good things. And for any of us, you know, who recall the financial crisis, simply developing systems that can reduce concentration in our financial system would obviously be a good thing. But does it really take us there? And part of that really goes to the use case. You know, what is the use case of these systems? Where obviously we've seen DeFi exchanges, DeFi lending platforms. Can they really scale up? And are they more efficient? And are they better than centralized? And I think, you know, that's a very interesting question. And believe me, having worked to respond to the financial crisis, I would love to see more decentralized things in our financial system. But you sort of then have to get to some basic questions about whether blockchain can really work in certain areas. You know, what are the use cases where you really do need multiple entities being able to post data to a ledger, where there's a lack of trust among those entities and where there's no centralized intermediary that could do it better? And, you know, we haven't figured that out yet, I would say.
Maybe I'll come to Laura on that point. Do you have any thoughts on, you know, this decentralized governance? What are the use cases for you, or where do you feel like there might be some value that isn't replicable in a centralized context?
Maybe if I wind back a little bit, right, as to why did decentralized governance, you know, catch the imagination of people? Because it's deemed to be able to provide more democratic and transparent decision-making process. And people, when they talk about the success of decentralized governance, many often, you know, I know people who quote going back to the times, you know, and examples of rivalry between Wikipedia as well as Encarta in the early 2000s, right? Encarta back then was a much better product, but Wikipedia improved at a much faster rate because it had an active community of volunteer contributors who were attracted to the decentralized community-governed ethos. And as you all know, by 2005, Wikipedia was the most popular reference site on the internet, and Encarta, which was a better product, was shut down in 2009. So I kind of think that the success of this model has kind of like inspired many players to experiment with new business models. And this was actually made possible with the emergence of new technologies such as blockchain. And, you know, much has been said about how they eliminate the middleman. But I think it's also very important to be able to differentiate between decentralized infrastructure as well as versus decentralized governance, right? So again, I'm not going to repeat what has been said earlier by Martin as well as team about how Bitcoin is a decentralized system, but essentially, you know, when you look at the governance, it's actually quite centralized. And that's also true for a lot of the DeFi platforms which use on-chain governance mechanisms as well. Although one can say that, you know, having on-chain governance has proven to be significantly user inclusive, but it's also very much plutocratic, right? Because, you know, the amount of tokens or wealth that you hold determines the weight of your vote. But in my opinion, the biggest risk to many networks of businesses is not that governance is too centralized, is that you have incompetent governance. So for me, ultimately for governance, it is key to understand, like, one, how decisions are made, two, how does accountability work? And three, how do we actually measure, performance management? So these are really key for me.
Yeah, I think a lot of good points there. I think you make a good point about the Encarta Wikipedia comparison. I think the sort of open source nature of a lot of development has been very successful and is therefore a very attractive model. But yes, as you say, there are when it comes to governance models, there are bad centralized models and good decentralized models. There's probably, there's good and bad ways to do both, I suppose. But let's talk about maybe some of the unique challenges that of ensuring accountability in the context of decentralized models. Martin, can I come to you on that? I'd be interested, what your perspective is on regulating decentralized governance, infrastructure that has decentralized governance models, because obviously there's a challenge there if it's not got a board that you can go and arrest.
Yes, that is a very important question, because as more business is attracted by those decentralized applications, we need to make sure that a level playing field is ensured. Level playing field across all parties who offer the same services, who produce the same risk for the financial system, and though they should be subject to the same regulation, to the same oversight, whatever. And here I can directly start with what Laura has said. It is not decentralized governance itself, which may be good. It is accountable governance, and it is transparent governance. And do we understand what it is? And do all participants understand who is really ruling the code, who is ruling there are usually many steps, the whole application, who is making money. Usually you could say, follow the money and you'll find the murderer. Sorry for the comparison. But here we see a lot of people making a lot of money, and obviously people involved in those applications don't really know it, don't see it. There is sometimes excess profit way beyond what we see in conventional financial market or conventional transactional banking or something like that. So what do we need? Well, we need a name. We need a clear name to address someone who is responsible for it. And so we have to make sure that we can address them. We need an address where we can look at. We need someone who is responsible for the code. And people say, oh, you don't get it because it's decentralized. And I always argue, I would not bet against the state in that case. It may be for a certain time that this is too little to notice. It may be that it is complicated to notice, and it may be you can find a dugout where you hide. But at some point, all people who make money, be it with decentralized finance or be it somewhere else, want to make use of that money in real world, in real money, either exchange it into US dollar or whatever, pound sterling, euro, or buy something. So at some point they cross the borderline to what the real economy where we know. So basically at that point we get them at the latest.
Yeah, absolutely. I mean, it does seem like if we're not able to come up with a satisfactory accountability model, regulators are still going to find somebody responsible. And I think we had the recent case. I don't think it's finalized now, but the BZX, Decentralized Autonomous Organization, where there's, I think, a preliminary ruling, correct me if I'm wrong, which I almost certainly am, a ruling that would hold token holders accountable, liable for the actions of a DAO. And that would be quite a novel and extended definition of governance or of accountability. But I think, I guess unless there's something more robust or convincing, that might be a way we go, and would be quite a challenge to DAOs as a governance model. I don't know if you've got any thoughts on that.
Yeah, and I think it's broader than that. So the famous tulip trading case in the UK is looking at the question and considering that it is a valid question to ask of whether smart contract developers can owe fiduciary duties. And like the answer to all legal questions, it ends up being possibly, and it depends. But it is a possibility. So I think the safe model, we would say, when we're structuring DAOs, is to use a legal wrapper. That's the current convention. And if you're a regulated fund, you probably wouldn't vote tokens. You would use a third-party service provider. So the logic of it is not being fully followed. But I think DAOs are perhaps more interesting than the legal community is giving them credit for at the moment. The UK Law Commission is starting a piece of work looking at the nature and value of DAOs, and I guess looking back in the history of law and finance, joint stock companies were as skeptically received back in the mid-19th century as DAOs are now. I wouldn't want to rule them out as being a kind of cooperative for the future of the internet, and we'll figure out the legal bits that support them off that. I think one point that is interesting about DAOs that I've seen in structuring recently is they certainly don't look like, they look even worse than the rest of crypto for money laundering. I think these days it's not a very good criminal who's still using crypto for money laundering. But in a DAO, if you're putting funds into a treasury, that can only be released on the vote of holders of tokens. Well, you're taking a hell of a risk that they're not going to agree to send it back to you once it's been washed. So, we fix some problems and raise new ones, like with anything else.
Yeah, there could be lots of technical tools for that, and I think you make a good point about the, not closing off as a model for governance, and we need to sort out what's required to get there. So, let's do that now. Tim, what's required for us to get to a situation where regulators can be comfortable supervising DAOs?
Well, I think it's kind of along the lines of what Martin and Charles and Laura have said. I mean, there has to be some regulatory attachment point. You can't, as Martin said, you can't have the same activity and not have it be subject to similar regulation. And the risks of some of these DeFi platforms, have been enumerated. The OECD document, I think, does a good job of that. I mean, it's not just the illicit activity. It's also the possibility of over-leverage. It's also the lack of resilience, potentially. There are others. And so, who do you look to? How do you impose regulation? And again, I would love to see us develop systems that are more decentralized, more democratic, more inclusive, more accessible, reduce concentrations of economic power, but they have to live up to the same standards. When DeFi platforms say, oh, we're so much cheaper than a centralized intermediary, well, it's probably because you're not doing AML and you're not doing KYC and you don't have the same cybersecurity protections and you don't have all these other things. So of course it's cheaper. It'll be a struggle to get there. I guess I like Martin's line, don't bet against the state. It's kind of how I feel at the end of the day. But it'll take some time.
Yeah. Laura, anything to add on that?
I think it's pretty much comprehensive, right? What Charles as well as Tim has earlier mentioned. But I do think that regarding regulation within DeFi, platforms can actually build protocols that comply with regulatory requirements, right? So it's also whether willingness for them to do so, and at what cost, right? I mean, I know that there are some libertarian ideals that they would like to hold to, but in order for them to, get mainstream adoption as well, it's not a matter of if, but I think it's a matter of when, they reconcile the fact that, look, that there has to be some form of consumer protection and recourse as well before you can actually have that catalytic shift into mainstream adoption.
Yeah.
If I can add one other thing too, I always find it almost amusing when some of the DeFi proponents will say, well, it's just code, and we're releasing the code, we're releasing the smart contract, and then it's just out there, and we can't change it. And it's like, well, does that really work? I mean, how often do you get an upgrade on your iPhone? Right? You've got to download, the circumstances have changed, so you got to update this or update that. We can't have a financial system that's run off of smart contracts that are released, years ago and assume that those are just going to continue to work perfectly. That's just not realistic. So again, it comes back to you know, how do you have some sort of regulatory point of attachment so you can impose these same standards, you can improve things, you can correct problems, yet hopefully still have some degree of decentralization that would be beneficial?
It might be useful to kind of delineate, and this is something that you hear proponents of DAOs talk about. It might be useful to delineate what is a legitimate subject for a decision to be made, but in a decentralized fashion, and that can then be automated or something like that, and what requires accountability. So I'm thinking about, cryptography standards or possibly prudential requirements. Possibly these are things that aren't really amenable to decentralized governance, but maybe you can have some kind of board that's liable for decisions like that, but they're not responsible for other sort of strategic decisions that can be made in a decentralized way. Is that something that, I guess some DAOs have that kind of approach?
Yeah, so I think it's probably not a question for a lawyer, so we would ask someone to tell us how it should be and we'd write it down, or we'd check the smart contract. That is work that's being conducted currently by a combination of deep tech people and sociologists. I maybe switch the emphasis for a second away from regulation and say that two of the things that do appeal to me about some of the innovation here is that it changes our view of conventional financial transactions, certainly from a lawyer's perspective, the documentation perspective, because the transactions have grown up in silos, and pretty much all financial transactions are just swapping cash flows one way or another, but they're documented in such significantly different ways, and in some cases in very long form. So I certainly agree with the point around law isn't code. Code isn't law. Code is similar to contract with some exceptions, would be a better way of describing it. But I think it puts pressure on the legal and financial industry to think again about the nature of all of the transactions that have been copied in DeFi. And DeFi isn't saying that for something that looks like a swap, we'd use some kind of smart contract version of ISDA documentation, or something that looks like a loan, we'd use a loan market association or LSTA sort of documentation. So I think they get to a good point there by saying, at heart, these transactions have got more in common than they've got different, and so we can document them in relatively common ways, smart contract or hybrid contract. And that is yet to feed through into the traditional markets, and I think there's a benefit to traditional markets when that happens. We've talked, particularly Laura mentions this, in broad terms, it's a digitalization technology, and therefore it's a simplification and automation technology. And we could do with more of that in financial markets. So it doesn't have to be unsafe, but it could be less work for lawyers, dare I say.
Well, let's talk about the kind of other avenue for digitalization in finance, which is well, we've had some representatives of it here already today with tokenization on the tokenization panel, where, as Laura alluded to, decentralized infrastructure is a very important part of it, but the governance is centralized with either the banks or a few other places. Can we talk a little bit about, I guess, what are the advantages and what can you do with tokenization and CeFi, that kind of digitalization, versus DeFi, and maybe a sort of point of comparison there. Martin, any thoughts on that?
This is a good point, because it brings us a little bit more to what we should focus on. The overall headline should be, in my eyes, the digitalization here. Tokenization is one aspect of it, and using other documentary technique, as Charles said, are others as well, including big data, artificial intelligence, we of course have an idea, all of us have an idea that our financial system should develop, should make use, a comprehensive use of all those new modern technologies. And if we then, coming back to your question, tokenization, if we then start implementing also more and more tokenized assets into that world, so that these assets, the trading, the rating, the lending, and so on, that these assets could be digitalized financial world, that would be helpful. That's why I said at the very what we look at as digital finance is an innovation driver, or it could become an innovation driver, and it is in some cases, of course. But then it has to be accepted and taken over by institutions who truly use that for, well, for financial business. What we call CFI, of course, institutions which have a name, which are regulated, and which do not operate under anonymous principle here. So tokenization as one aspect of digitalization is very important here, but it's not bound to decentralization, of course. Yeah.
Yeah, certainly. Laura, anything to add there?
Yeah, well, I kind of like the ideals of decentralized, not really governance but infrastructure, mainly because they have open protocols, which helps to break down walled gardens, right? And that could in turn spur innovation, and at which you see innovation innovating at the speed of the entire community, versus with traditional finance or in centralized entities, whereby innovation only can go as fast as how the company's employees are able to innovate. So having things like composability and all that really helps to potentially leapfrog the building blocks, and coming out with like new innovative ideas at a much faster speed, right? Very much like the earlier example that I was giving on Wikipedia versus Encarta in a way, but in a different context, because this is mainly in the realm of financial services. So that point I find rather fascinating. But again, with everything, you always have pros and cons, right? So with the pros, there also comes the cons, right? And to me, it's not about whether they can exist separately, but how do you actually bridge the two worlds together, and really for this to rise to prominence, right? Most likely we'll see hybrid solutions, and the future to me is whether it shouldn't be about whether the future is centralized or decentralized, but it should be about like who's going to be the first one to bridge the divide between the two, and that will be something I'm quite interested to see on the developments.
Yes, the next question is, what do we think it actually takes to, what do we still need from a regulatory or a technical perspective to bridge that divide, or is it a cultural question, or what are we lacking there?
I just think this is going to be evolutionary. I mean, I agree with Laura's point that you'd like to see us be able to take these advantage of the open access, potential interoperability, potential composability of these systems, breaking down walled gardens. I mean, all that's clearly a benefit. How you get there at the same time as you also achieve the regulatory objectives, so that you don't have fraud and scams and rug pulls and kind of the other abuses we've seen, and the illicit activity. I don't have the solution today. I think it's just going to be evolutionary. We'll see.
Yeah. Anything to add on things we're lacking to make that gap? I mean, maybe on a legal side. Well, I guess we'll see. Yeah. We'll see. We've got the results of the poll. So would you like to guess what proportion of a non-FIF audience has participated in a DeFi transaction?
I can see over your shoulder.
You've seen the answer, so you're not allowed to guess. Very honest of you. Any? Okay, let's put them up on the screen. So 50% of our own fifth audience has participated. Another 15% expect to in the next 2 years, and a quarter expect to, but not in the next 2 years. Only 10% not expecting to. So it could, that's a pretty high proportion. That's maybe higher than I would have expected, but I guess we'll probably only see that grow as, you know, on the evolutionary basis that that Tim was talking about. Can we have our panelists back, please? Great. So we've got some questions coming in from the audience, and I'll come to the audience in the room in a moment, but we've got a question from the virtual audience, and do feel free to send in more of those. From Maludi Mahfoud, Trade Finance Manager at Akhtar Bank. What could DeFi add, and what features could it present for trade finance in the future? So yeah, I mean, decentralized settlement. Certainly, DLT has been quite an important part of trade finance already. Do you feel like decentralized finance can add new innovation there?
I think I'd only note that it is a good example of a use case because you do have multi-party transactions without existing relationships. So it's kind of as much a slam dunk as anything for a use case in blockchain.
Yeah, I think that's fair. Laura, anything? Do you have any thoughts on what DeFi might add for trade finance?
I think it's, again, back to what everyone has mentioned, right? It's a digitization first process. I think, you know, with a lot of the current real world assets as we see today, most of them still use very arcane processes. So I think if we can get them to even like move up the digitization curve, to me, that's really a big win, right? And I wanted to go back to the survey. I thought it was really interesting that, you know, 50% of people actually used DeFi. But could that also be because, you know, when we saw the failures of, you know, CeFi, it kind of reminded people, you know, so long as you don't hold, you know, not your private keys, not your crypto, right? So that was there, you know, a force function, a little bit of that, right? To sort of like move people over until, you know, we get clearer regulatory clarity as well as guidance. Maybe first on CeFi first, right? Then we can move on to, you know, tackle DeFi, right? But again, like, you know, I like your example whereby, you know, when BYZ, you know, the regulators are already not resting on the laurels. They're going on a two-pronged approach. First, it's no longer like, you know, incremental, okay, first CeFi, then DeFi, but it's like, let's tackle both of them at once. So it'll be interesting how that works.
Yeah, absolutely. Thank you for that. Well, let's come to the audience in the room. Any questions for the panel on DeFi? There, Chris at the back.
Thank you. Yeah, Chris Ostrowski from Soda. I'm wondering if we're sort of slightly mixing up sometimes disintermediation and DeFi, and because they're not necessarily the same thing. Because when you were asked to describe DeFi at the beginning, Charles, you said, well, the intermediaries kind of disappear and we replace them with new ones, and that was sort of semi-jokingly. And I suppose, you know, if you give me £5, most people would say there's no intermediary. Now, you might want to say the Bank of England is actually an actor in that transaction. If you give me 1 Bitcoin, self-custody to self-custody, most people would say there's no intermediary there. But there are obviously other actors, principally the validators. And I think people quite like the idea of disintermediation in that pure sense. But that's different from decentralized governance of all the other actors in the ecosystem or in the environment. And I just wonder if there's a better way we can describe this so that that's a bit clearer. And Timothy spoke about too much concentrated risk, too much centralized risk. That's caused the problems in 2008. So people like what I'm describing here. So perhaps we can do something about that. I'm not quite sure what the answer is, but that did strike me when we've been discussing it in the last 40 minutes or so.
Well, I guess I don't know quite where that takes us. I mean, when you say disintermediation in that sense, are we just talking about smaller entities and transacting? Because I guess it still feels to me like there is this linkage between the disintermediation aspect and the decentralization aspect. I mean, that those two things are related, aren't they? I mean, I guess I'm trying to imagine if you're suggesting, well, we could have disintermediation without a more decentralized kind of system in some respect. Is that kind of what you're suggesting?
More about whether we can actually use those terms interchangeably. And I think you were using the terms interchangeably. I'm not sure that you can.
Yeah, they're different. They're certainly different. I think decentralization, we're talking more about the specific governance aspect, and disintermediation, we're obviously talking about, is there a middleman? And sure, I mean, creating systems where there maybe are fewer intermediaries extracting rent in some way is a good thing. But I guess when I think about what those look like, they seem to often be, they would have to be accompanied by decentralized governance, or else there's going to be some central actor in there, and they're probably going to be looking for the rent.
I think, well, sorry, I think, yeah.
It's one to think about. So I guess Bitcoin is always both an excellent and a terrible example of everything in crypto. And I guess, Chris, you're picking out the sort of purity of it, that it is, it's decentralized in that peer-to-peer perspective, but we got the questions around validators and incentives, and I forget the author of the paper who was looking at economic incentives to maintain the system, which goes back to Tim's point around whether people are going to bother, and it turns out to be a very small number of technically gifted people. So I'd like to think about that. So we should never let a lawyer get going on definitional questions, because we never get beyond them. We just wrote a report for UK Finance where we had sections at the start trying to say that we're using the terms token and crypto asset and crypto hyphen asset and digital asset interchangeably all the way through, and then correcting ourselves at each section when we're not using them interchangeably. So it's one of the most difficult things about crypto more generally, that, am I quoting Wittgenstein if I say that most arguments in crypto are arguments about language and terminology? I'll have to think about it.
Thank you, Chris. I wonder if it might be a question of, if we're thinking about decentralized finance, not always just fewer intermediaries, but I guess fewer, more automation in the decision making. Laura, have you got any thoughts on that? I guess, do you feel like automated decision making as well as fewer intermediaries is kind of part of what we mean when we're talking about DeFi?
Yeah, I agree that decentralization and disintermediation are two different concepts that are often used interchangeably, but they also have very distinct meanings, right? Generally, and I think as the team has mentioned, decentralization refers to distribution of power and decision making rather than being concentrated. And in the context of DeFi, decentralization actually means that you have financial transactions and services which are facilitated by your decentralized network of nodes, right? Without having to rely on a bank or an FI or a financial intermediary, right? And disintermediation, on the other hand, refers to, again, like Tim has also correctly pointed out, to the elimination of intermediaries, such as the middleman, right, being replaced by smart contracts or automated protocols, right? So the way I see it is that disintermediation is actually a consequence of DeFi's decentralized nature, but it's not the same as decentralization, if that makes sense. It's a kind of a long-winded way of looking at it, but that's how I
Yeah.
I often, this is not quite on answering your question, but I'm just reminded of it when we get into these conversations. I think about Lending Club, right? Lending Club started out, it was going to match borrowers and lenders. I was going to be able to go on if I wanted to lend money and pick my borrower, and we'd transact directly, and be this incredibly decentralized, disintermediated, participatory thing. And then what happened over time was they kind of developed more of a centralized credit evaluation process, and hedge funds started funding it, and it just kind of migrated. Now, again, I'm all for decentralization. I'm all for eliminating unnecessary rent takers. And, we do have examples. I mean, various countries in Europe had a very strong co-op movement. We had a very strong co-op movement in certain parts of the US. You can think about those as maybe those are models that we could think of that might have some lessons for us in terms of how DAOs work and how these things can work. But it's very hard, I think, because there often are efficiencies that come from centralization, and there are obviously economic incentives to people concentrating power. And so they move in and they try to concentrate power.
Yeah, absolutely. I knew we wouldn't really get out of the definition question as easily as I thought we had at the start of the panel. I thought we'd be back there sooner or later. Any other questions from the audience? Yes. Oh, yeah.
Do you have any views? Is this working? Yeah. Do you have any views on embedded supervision? And is there a world where regulators actually intervene at the smart contract level, either directly or indirectly? I'm not going to say they're going to use AI to intervene, because then it would be very utopic. But is there a roadmap where we get there, and what could it look like?
Well, I'll just answer quickly. Charles probably has more to say about this than I, but I mean, the simple idea of a regulator having a node on a system and being able to see, what's going on is I think, a very exciting idea that could speed up and make more efficient the regulatory process. And obviously then being able to build in the standards into the smart contract be beneficial.
I completely agree. And I was with you 100% until the bit about what the roadmap for it would be.
Martin, any thoughts on embedded supervision, and have you a roadmap for it?
Yes, the idea is indeed fascinating. One could have a node on the network, have an automatic check on it using AI. Maybe we could also think of that they intervene immediately if something happens which is not according to the rules, or which is causing too much risk. This is a fascinating idea. However, as a public servant, I know we have advantages, the public, and our advantages usually guaranteeing stability. Our great disadvantage, or let's put it that way, we don't have an advantage when it comes to innovation. So as soon as you have a regulator or any other public on the productive side, it may hamper further innovation. It may be a problem. What do we do? How do we solve it today? Well, we require banks, for instance, to measure all anti-money laundering rules and so on, and you have to use any program which solves that. And then you tell us, oh, we use this and that program, check it, and when the check is good, then you can use it. If they come up with a better program, that's okay. We check it again, and then you can use that. We don't hamper the innovative processes. We don't interfere in the competitive markets of programs who check money laundering, or programs to everything, you name it. So I really like the idea of embedded regulation as a theoretical construct, but I would mark the point: don't prohibit innovation here.
So a cautious, but cautious approach. We had another question, which go for it.
Yes, it's working. Tim, I fully support your view about the importance of mutuals mutual finance-based organizations, which I think actually are beautiful models of both a centralized and a decentralized operation. And frankly, I think that applying some of the potential of distributed technology and digital money to mutual organizations is a far better use of our time than trying to think up new things to do with private finance. And in a way, I feel we're like at the very, very early days of the internet, when there are 17,000 different things we can do with this internet, and it took a period of winnowing out. I was just wanting to ask the panel, which has clearly got tremendous experience in this, can you give us any examples of really successful or potentially successful DeFi businesses that we're currently seeing? Because I may be looking in the wrong places, but I'm struggling.
Any clients you want to plug? Or
So I won't. It sounds like you're skeptical about the protocol. So yeah. Yeah, so I'm going to use that as an opportunity to throw your way and everyone's way something I think about a lot at the moment, which I think is a hard problem, and I can't see where it lands. So it's one of the 17,000 things currently, I'm afraid. But it relates to the question of did we get the internet that we wanted? So there are a bunch of projects now that are looking at tokenization of data, including personal data. And the most valuable thing on the internet is personal data, apart from the money that's on the internet. So I think there's an easy case to be made for decentralization in that Web3 model of own your own data, own your own content, be paid for the contribution. Don't be an unpaid content creator to the social media platforms. So I'm hugely attracted by that as a model. But it then has the implication of the financialization of everything, and the whole of the internet becomes either one giant or a billion different financial products. And regulators are finding this hard enough. The idea of regulating this, I really can't quite see how it would be done. And we can see in the UK with the online safety bill, so that's been 2 or 3 years working its way through, and we're still regulating the internet. It strikes me as almost an impossibility. And so this point around decentralization of personal data and personal ownership of personal data, that strikes me as a use case that doesn't take us down the road of it's money, we have centralized entities and regulators and similar. But if anyone can help me figure that out, I'd love to talk to you.
Maybe at the drinks after. Any answers for Phil on use cases for decentralized finance? I'm looking at the screen, but you can't see that for Martin or Laura.
Yeah, so if you look at the use cases for DeFi as of today, I mean, if you look at the largest ones, right, they are largely, in a form of DEX or lending, so it's like lending and borrowing platforms as well as trading platforms. I think what was fascinating for me was, how quickly they have grown. Now, obviously, we are in the throes of a crypto winter, so you would see that, valuations have come down quite a bit. But, at the peak of, of the activity, the growth of these companies, who have just come up from nowhere, to billions of dollars is just amazing, right? I mean, just put into context, the market cap of JP Morgan for, after, they've operated for, how many number of years, it's $400 billion. And then you look at, how fast, DeFi has grown, and you put those two, juxtapose those two in context. It's not something to be scoffed at lightly. Now, detractors will always argue that look, most of the value, comes from speculation, and people, wanting to get rich, quick. and therefore, taking very high risk attitudes towards it. Now, one can look at it in that manner, but the other way I would like to think about it, it's also that, are these platforms, enabling, more peer-to-peer transactions, which to me is an innovation in itself, something that, if you draw back again to the earlier ethos of like why blockchain, what was it trying to or hoping to achieve, and if you look at it in a purist form as well, could it potentially also help financial, the more lofty goals, for example, like financial inclusion. Now, and I'm not saying that the uneducated is going to be able to use DeFi, because that in itself, it's not the most user friendly and not the most easy to understand. But if you think broader, that if you could overcome some of the hurdles that and the challenges that we're seeing in DeFi today, could it actually enable greater good? That's how I would like to think of this new innovative technology. Obviously, only if you can, overcome some of the hurdles that has been spoken at this panel and also on the earlier panels as well. Not just regulatory, but also in terms of user friendliness, scalability, security, and all interoperability, etc. So it's in its early days. Yeah, sorry. Go ahead.
Can I take that opportunity to repurpose Laura's point to say, well, I think we'd all agree, as she referenced JP Morgan, we don't want JP Morgan to buy all of the banks. So how many is it allowed to buy? There is a limit to the centralization in a system that is acceptable and from a policy and social perspective.
How many? Any other questions from the audience? Nope, I think we'll, there was just before we wind up then, I guess one of the things that I wanted to ask that we hadn't quite touched on earlier was, we talked about regulatory changes that are needed for wider adoption of DeFi. Are there aspects of technical infrastructure changes that we also need to develop? I'm thinking about things like digital identity, which was already mentioned on the panel, that would be valuable in producing that, and maybe even beyond that, some cultural changes. So if I give you all a chance to answer that, and then we can wind up. Do you want to?
I think all the issues that have been touched on in the course of the day about permissionless blockchains and digital identity, and resiliency of those blockchains are critical. That was talked about by Ivan, and when we talked about Mika, that were talked about the first lecture this morning. Those to me are all critical, and digital identity in particular plays, I think, a huge role in that.
Yeah, absolutely. Martin, anything you want to add? Oh, has he frozen? Possible. Let's go to Laura then, and then maybe Martin will come back.
Well, I think with all new technology and applications, as I mentioned earlier, there has to be an education process. And maybe to fully embrace DeFi, people also may need to adjust their perceptions of finance and potentially become comfortable with of trust.
I'm afraid we're losing the connection here. I'm sorry. We'll come to Charles, and then we'll come back to you guys.
Yeah, well, digital identity, I think I follow Dave Birch, who was buzzing around, whether he's still here, I don't know. So it's a plug for his books or his Substack. For sure, I definitely support the point that I don't need to give away all of my personal information, my birthdays and where I live, to buy a drink in a pub. And then I think all of these questions are so difficult because both A and not A are true as answers. So to take CBDC maybe to finish, everything I'm saying, you wouldn't be surprised that I'm in favour. They're digital products, but they're kind of creepy.
Yeah, some problems to be solved there. Martin, should we have another try with you? I was asking if you had any final thoughts on components of infrastructure that are needed for wider adoption.
Well, thanks. Sorry, I had a show formally, though I was got stuck here. First, let me add. We have been talking maybe a bit negative on these whole issues of decentralized finance, and what I also would like to mention. I was talking about innovation driver and so on. There are a lot of interesting approaches out there. However, what I believe is this is not a separate world, as I said somewhere. We have to adapt DeFi or those ideas in DeFi, automatic lending, automatic trading, I don't know, insurance. There are problems, I know. We have to adapt that to the world as we know it here. And then, of course, things will look different. There will be some intermediaries may lose part of their business. I don't say they will vanish. That's not the point. But the business will be different. It will be more in those fields where you don't have a great impact of incentives, like insurance, and in those fields where you have a large impact of network economies, like transaction banking. In others, lending, deposit taking, and so on, we will see more impact.
Thank you, Martin. We're very short of time now, or slightly over time, so I think we should leave it there. But thank you, everyone, for listening. And I think we're going straight on to our panel on AI now with Maury Schenk. So please do stick around for that, and I hope you've enjoyed it. And thank you to my panelists for a very interesting discussion.